if you can get all of the materials to make your product in the US, that could be a pretty significant savings I wanted to throw in there, depending on what products go into your items. I mean, that's not always the case, but there are some levers around that, or even getting them filled in like Mexico or something to that extent. Because then you're not paying a tariff on the total item, you're only paying it on the pieces that you're importing from China as finished goods, as finished packages, even though it's not your total finished good. I don't know if I made that more confusing or cleared that up a little bit.
Hello, and welcome to the next episode of the Beating the Brand podcast. I'm here with Danielle Monogue, and she's the founder of RetailOI and an inventory strategist for product-based brands. She also has been inside of our mastermind as our inventory and supply chain specialist, and is just an incredible wealth of knowledge. She's 15 years in corporate retail, managing merchandising and forecasting for giants like Nordstrom, JCPenney, Georgia Pacific. Danielle now helps beauty and wellness founders scale smarter by making inventory work for them, not against them. So super excited to have you on here, Danielle. Welcome.
Thank you. I'm excited to be here.
Yes. I mean, you blew us away in our founders. You blew us away with your inventory spreadsheet and like planning system. And it's just, there's so much to it. And you don't realize how much there is to it. So I have so many questions for you. Let's dive in. Our founders typically are earlier stage, so they're usually, 7 figures or under, or like multi 7 figures and under. So for those earlier stage beauty and wellness brands, inventory can really make or break a business because there's a lot at stake when you're investing so much money into inventory, and you may not know how much to invest in or how far ahead. So what would you say are the most common inventory mistakes you see startups making, and how can founders avoid them?
So I think to begin, one, when you're a startup founder, there are so many challenges that you have to navigate and figure out. So I think to start, if you're ordering products to begin with, I would start with what you believe are going to be the hero items. And let's start there and start building some sales before you buy the whole portfolio. Because all items are not created equal. Yeah. And you're going to have your workhorses and you're going to have your support items. And I think understanding the role each of those items play in your brand are really important. And let's start with what you think the workhorses are going to be. Let's get the pricing and margins right on those first, and then expand the portfolio versus diving all in, because I've seen brands where they buy the MOQs across, let's say 12 to 15 different items, and they have 4 or 5 that are the workhorses, and they can't keep those in stock. But then they have a cash flow problem because they have these other 10 items that are moving at a much slower pace because they have all this inventory invested in those items. So when you can, let's prioritize your items and order from that perspective.
Okay, I love that. I love that tip. I love that suggestion. I love how you call it like the workhorses of the business, and how strategically you want to invest more in the workhorses versus something that is more of a supporting character. Okay, I'm going to challenge you here. So what if I'm a founder? What if I don't know what my workhorse is? Or, I know you mentioned like what you think it might be. Well, what if I haven't market tested it?
So I do think market testing, ideally where you can, is always beneficial. But also I think just like as people build brands through like Instagram and TikTok, like you're getting feedback from customers all the time of what you're about your brand and who you stand for. So like you can even do a quick test that way of like, oh, what would you guys think if I launched this new mascara, and get some feedback. And like, if you get mascara out there and the mascara has like 50,000 likes or even 500 likes, and then you do like a blush, but the blush gets 3 times whatever that other amount is, then you want to invest more in the blush to start. I mean, it's not a perfect science, but like I do think there are so many avenues now that are like so much easier to get market research feedback. It may not be like through a traditional survey or anything like that, or like even product tested, but at least you can get an idea of what your audience is looking for.
I absolutely love that. Yeah.
I was going to say secondary, go to Sephora, go to Ulta, see what items they have as the key items that they have the most inventory in or are typically like turning the fastest. I think you can usually just ask somebody, a sales associate, and be like, what is most frequently bought? Is it lips? Is it whatever? And then kind of get their guidance too. I think there are other ways that you can get information if you haven't built the audience yet and you're trying to figure out where to start. Like, go to stores and ask around of what people are buying. And then I think you can make a initial judgment call off of that.
Love that. Even looking at like Sephora.com and just seeing what they're pushing as their bestseller or what their bestsellers are might be another indication as well. What are some like lean inventory strategies that you would recommend founders leverage who, may not have a warehouse or a forecasting team behind them?
So one, I would go back to like have a role for all of your items and then beef up on the items that are your heavy hitters and leaner on the other items. I think part two, from a packaging and manufacturing perspective, especially even if you're like making the cosmetics at home, like how can you be consistent across like the bottles you're using or how you're applying branding, or if there's like a dropper or a lid, like where you can be consistent across the actual packaging items and maybe something's different about the sticker or the actual box with it, you can save a lot of money there. Because if every unique item has a unique packaging setup, you're then going to run into packaging minimums for each of the items on top of actual production.
Okay. Yeah, that's a biggie. How do you streamline the variability or reduce variability in your packaging? It's interesting that you say that, because I love that you said this, because I remember with our secondary packaging for Nomatera, what we did is we knew that like our chosen manufacturer for secondary packaging had a certain MOQ. And so we standardized the design of each of the fragrances of the secondary boxes across the board. And then the only thing that really changed was like the colorways. And everything else, like the layouts were the same. Of course, the name of the products were different, but like the unit itself was the same. And so it was a matter of printing variability versus a mold variability. So that
where you can do that, you can save a lot of money in the long run.
Huge. We were able to take like that 10,000 MOQ and break it up into like 6 fragrances or 8 fragrances instead of, having to do like 10,000 per fragrance. Yeah. So, okay. So let's say, someone just launched their first product. What are they, what's like the minimum data they need to be tracking?
I would say sales dollars, sales units, and then the margin they're making on it. So like, are you promoting it? Like, is your retail price, call it $19.99, but you're promoting it at $14.99? And then watch your sales dollars, because when you're at $19.99, how much are you selling and how much are you selling at $14.99? So you can see what the lift is. Because I think as you forecast inventory in the future, like knowing what different price points do for your item is really important. Because even if you're only selling 100 at the beginning, but you go 100 at $19.99 and it's say, or even 10, let's say you're selling 10 at the beginning and then you go to $14.99 and you sell 20. So you're getting a 100% lift. Well, when that 10 went from 10 to 20, when you go from 1,000, it's most likely going to go somewhere between like 1,800 and 2,200. But you'll know what the percent lifts are as the volume changes. And I mean, as your audience changes, there's some other fluctuations there, but establishing a baseline is important. And I think when you're tracking sales, you need to also make sure you're continuing to increase. I mean, there's obviously seasonal peaks and valleys, like holidays are obviously much higher for the beauty industry than January. But you want to continue to make sure you're growing. And then whenever your plateau or whatever your true baseline is, understanding what that is, and then how do you continue to grow that?
There's actually, from the digital marketing standpoint, there's a solution for that as well, which is like creating a different landing page, same information, just the only difference is the price. So you can spend like 2 or 3 different landing pages and test the price at the same time, by sending, running ads or typically it would be through running ads to those individual links of those individual landing pages with the same exact content, ad content, and seeing which one's converting the best. Because sometimes there's also like perhaps like when you look at maybe the lower price sells the most, like most units, but when you look at the profitability, it's the middle one that actually gives you the most profit for the volume that you sold, right? So there's also that distinction that I think needs to be made, that it's not just like number of units sold, but really it comes down to the margins, like you said.
Yeah, no, I totally agree. Because like, yeah, you can sell 10,000 units at $9.99, but if you're only making $1 a unit,
Right.
do you really want to sell it at that? Or if you're selling it at $14.99 and say you're selling 8,000 units, yeah, you're selling 2,000 units less, but now you're making $5. So
Right.
yeah, understanding that is critical.
Absolutely. Okay, so tariffs. Heavy topic. I'm sure you've had your clients come to you with many a tariff conversations or questions. Would you say so?
I would say I've spent a lot of time the last 2 months talking about tariffs.
Oh my gosh. So you're like done. Like this is like you can't even have it.
Yeah. I can still have a conversation. It's a little unpredictable right now, but
very unpredictable. Although as of this particular day, so when this goes live, this may be completely different. But as of this day, I know 2 days ago, the China tariff was reduced significantly. I know it's temporary, but do you have any thoughts on that?
I think the opportunity this presents, while tariffs went across the board, China does have a really strong manufacturing presence, but I do think there are other resources. So this is an opportunity for like, if you're looking at your supply chain, and other countries are getting more aggressive with maybe some of their pricing right now to like lock in deals. So I think there is some leverage that you can use to find maybe a different supplier, especially if you aren't loving your current supplier. Now, if you love them, it might be worth keeping them. But I don't know. I think it's a good opportunity. Honestly, regardless of tariffs or not, I do think that is something you should be looking at at least every year in your business. Like, who are you sourcing from? What are the sourcing alternatives? How do you leverage that appropriately?
Absolutely. And how do you recommend, because I'm not even nuanced enough in this topic, like how would you recommend founders build in a buffer cushion, whether it be, I guess, freight duties, tariffs, especially if they're, importing from places like China?
So, okay. So I always recommend a buffer because, I mean, honestly, like freight has been going up year over year, pretty consistently.
How much? Do you know?
It's really changed. It depends on what gas prices are doing. So it's very hard to actually predict that.
Didn't know that. Okay.
So as gas changes, that influences freight rates. And then labor changes. So there's a lot of factors that go into a freight rate. But I think, so one thing on the tariffs before I move on. Tariffs, so it is where you're getting tariffed from what the finished goods are, where that country of origin is. So there are also some components where if you just bring in your packaging from China and you fill in the US, you could save money if you can get all of the materials to make your product in the US. That could be a pretty significant savings I wanted to throw in there. Depending on what products go into your items. I mean, that's not always the case, but there are some levers around that, or even getting them filled in like Mexico or something to that extent. Because then you're not paying a tariff on the total item. You're only paying it on the pieces that you're importing from China as finished goods, as finished packages, even though it's not your total finished good. I don't know if I made that more confusing or cleared that up a little bit.
No, that makes sense. I've been hearing a lot about Mexico and fulfillment in Mexico to kind of circumnavigate or at least reduce the tariff to a degree.
To a degree, yes. It's still like, depends on, yes. It's very nuanced. But so yes, that should take out some a little bit. But as far as freight rates and stuff like that, what I would do is I would track what you're currently spending on freight whenever you get a shipment in. And then honestly, I would just put like a 5% or 3% buffer on whatever you spent the last time, and then just track it over time. I mean, you're never going to get that perfect, but at least if you have a little bit of a buffer in there, then if it goes up a little bit, you're going to be fine. And if it goes down, that's a huge bonus. But you're still pricing your goods to afford any kind of increase. So I usually put like a 3 to 5% buffer on any freight rates that I use.
Okay. So 3 to 5% buffer. And anything else that I should be asking you about tariffs?
I think, unfortunately, we don't have a crystal ball and they're constantly changing. But you can go online. Oh, shoot. I don't know the website off the top of my head. I'll send it to you so you can put it in the show notes. But you can go up and look at what your HTS code is. And that is what determines the trade rate or the tariff rate.
Yes.
And so your HTS code. So there are some HTS code items that are actually under the USCMA, US, Canada, and Mexico agreement that are actually not getting tariffed at all. So depending on the products, like if you become a master of the HTS codes, you can figure out what it is. But I think if you have some like items that you're specifically doing a ton of importing on, I would look up those codes specifically. But you can look up your HTS code, and then that can help you figure out what actually the tariff is on your item.
That's cool. That's cool. I didn't know that. The things you learn.
Full of boring fun facts about HTS codes.
I know, but that's cool. That's so important to know. Like, okay, well, this is what I'm expected to pay versus like kind of just winging it and waiting.
Right.
You know, at least you can plan for it. Okay, so when you're in startup mode, how do you forecast demand where there's no baseline? Like, what's sort of the scrappy version of what some of the big brands do?
So big brands use a like item. So if you are truly a new startup and you don't have any items to compare off, this is where I'd go back to like looking at Sephora.com, because it will say like X sold in an hour or X sold today. And again, as a reminder, those items are on Sephora, so they definitely have a different trajectory. But I think like if you kind of just have to get a little bit scrappy of like, what is your audience interested in? How big is your audience? And then if say your audience is, I don't know, 5,000 people, and you think maybe 1% of it would buy that item, like you can start there. I think I would use the metrics that you have that are the reason you're starting this brand. And again, where you can poll or do like random questions, even if it's not a traditional, like just get an idea. And I would start with that. But then I think that using Sephora.com or Ulta.com or even like going into stores, I think you can then figure out like, if you're looking at a lip and a mascara or whatever, you can determine what the right ratio is to start there too.
And then what would be like, if I'm a founder, what would be a good sign that maybe, or an early sign that inventory is working against me? Like maybe it's sitting too long or not turning over, or you're overbuying, or what are some, like, what's a good indication?
I would say inventory turn, or if you have to promote too deeply to move the items.
Okay.
So if you're at $14.99 is your sweet spot, like we were talking about that item earlier, and you're having to go to $9.99 because you're holding too much inventory that you need to move through, like that is a sign that you're overbuying and you're sitting on too much. And like, you probably don't need to place more until you can successfully sustain $14.99 at a comfortable rate.
So good. And can you give us like an example of like a small brand case study that you have experience with, or that you've worked with, where you sort of help clean up their supply chain and turn things around for them?
Yeah, for sure. So I'm actually going to use an apparel store, because apparel has like a whole other fun level of like sizing.
That's true.
So yeah, so that's a different level. Beauty you have more SKUs, but I don't know. Every industry has their own unique factor that makes them a little bit complicated to forecast. But okay, so I worked with a high-end boutique, and they had actually a lot of stylists who worked for them, and these stylists were like doing amazing sales. This boutique was doing a couple $1 million a year. But they were getting way over inventoried because they weren't reviewing like the size selling of the item. Like they get an item in and they knew that like it did really well, and they bought 4 and they sold 3 within like 3 days. So they were turning some of the items really fast. But the problem is they were never selling certain sizes. And so they just got
And they
this
didn't know.
gluttonous, like they didn't realize it because they would be like, oh my gosh, it did so well. And so then they'd reorder it, and they would reorder it in the same size run they bought the first time. And then maybe they'd eventually sell one of their sizes on like the first markdown.
Yeah.
Because in apparel, you market, there's like pretty much for fashion apparel, you like have a markdown schedule when you buy it. And they would just kept getting caught with the same sizing over and over again. That was just sitting because they didn't have enough clients that were in that size run to warrant it. So, you know, like we went through, and part of the biggest issue is that they weren't organized on the front end to set it up to where you could even tell that they weren't selling those sizes. Because when they were setting up the items, they weren't setting it up by size. They were just like setting up the item and ringing it up.
No,
it was wild. I know, it's heartbreaking.
I didn't even know that, and I'm not like an operations person.
I know, they were just buying so much stuff, and they had a very few amount of people working.
Crazy. Okay, wait, hold on, Danielle. Side tango. I had a pop-up shop in Soho that I ran with 3 other women. And we sold other brands. So we had many different brands in this shop. And so that was my like experience, like actually having like a retail store that was mine for like a significant, you know, somewhat, you know, it was like a few month period of time because it was a pop-up. And we definitely put in the sizing.
I'm glad to hear that.
We did, but towards the end, when we were, you know, closing down the pop-up at the culmination of the pop-up, we were finding like extra inventory that wasn't tracked. There were a handful of situations where we had like extra inventory that wasn't tracked or under inventory. And it was like, it took us hours trying to process inventory.
No, that happens all the time, because I think like especially if you're, this goes back to my like being organized on the front end, like you need to know what you own. I mean, you're never going to be perfect because like there are damages, there are losses, but like, especially in your industry, like damages, like if somebody's just throwing it away and then not marking it out of stock, that also creates an issue.
That also creates an issue. You're right. Okay.
So there's a lot of things like that honestly, just this retail store, like the fundamentals of like getting their processes set up was like a huge win before I even went in and helped them improve their turn by like focusing on, again, the heavy hitter brands that they do really well with, the heavy hitter sizes, making sure they bought enough of those. Let's have a representation of sizes across the board, but we don't need to invest in every size and every style equally. So we built them a better assortment tool, and we went through like that process. But I do think like actually managing the fundamentals of like, if you get a damage, mark it out of stock and label it as a damage. So then you're also not like, why did we throw this item away? Having like clear identifiers is a big thing. Or in your industry, I'm sure there's lots of batch issues where something comes in and it's not the right color, or it's not the right texture. Or as I know, as you expand and you go into retailers, you're going to send gratis. Make sure you're tracking all of that, because part 2, you could be sending a lot of gratis and not realize tracking that either.
Okay. I love this because this is so important. I was just talking about gratis with Tammy from our mastermind, actually, who I know you met virtually. But that's such a great reminder and great point about make sure you're tracking the gratis, and you're tracking it because for a few different reasons. Like I imagine one reason being that obviously you want to know what's getting sent out, why, you know, on the founder and the brand end, you know, how many pieces have gone out for gratis. You also want to be marking those gratis so that people aren't like reselling them, and or the buyer retailer is using it as product to sell, right?
Well, you want to do it for both those reasons, but you also want to do it for your budget, because I think like part of your actual operating cost is sampling. Right. So like knowing what you're spending on sampling as you continue to grow, like what % of your budget are you comfortable with? And then eventually as you get into larger retailers, like that budget obviously has to grow, but your sales volume is growing. So making sure that's also not getting out of whack. I think there's a lot of reasons to track that, but just track where all your stuff goes
This
and
is
what it is.
amazing. And what it is and what sizes and colors.
Yeah.
Okay, that's fascinating. Okay, so then how do you help founders get that sweet spot between like having enough stock, to scale, especially like as, preparing for the holidays, you're going to have more, you're going to be selling more, right? Versus also not overextending themselves financially. And follow-up question to that is if you had to choose, do you lean towards one or the other?
Okay. So I think the process I really use is one, the first phase, like let's identify, as we said earlier, like your heavy hitters, your support items. Every item in your assortment needs to have a role. So what is the role of that? And then two, let's go through your promotions that you've done and the pricing that you've done to understand like where the baselines are. And then then from there, we go through and we forecast out what your current inventory is and how far that can get you in each of these items based on whatever you plan to do promotionally or not. So we go through those phases. And then after that, that's also where we then discuss like, okay, do you want to ramp up sales on any of these items for holiday? And like we kind of forecast that in there as well. So it's more like you're making a strategy. And like, I'll be honest, like the strategy never goes perfect. Like,
Of course.
again, I would be a billionaire if I could figure that out, but we're not there yet. But I think like you really just want to know like what your strategy is. And then if something's not working to the strategy that we put in place, like let's modify and adjust. And where we have to the point earlier where I said, like where you can use the same packaging or the same bottles or do all that stuff. Like let's try to streamline your supply chain so you are as flexible as possible to where if something does take off, because one thing that's different now than let's call it the last 15 years is like something can go viral and then suddenly you're sold out and that's a blessing and a real surprise. But like, let's make your supply chain as flexible as possible. And then let's give all of your items a role and then build out the strategy. And then we'll adapt to the strategy as we move forward. And I think that's one thing like in retail, regardless of what role you play in retail, you always have to be adaptable because everything's changing every day.
Absolutely. Yeah, I think that that's such a tough situation when you are sold out and then, one thing you can do, of course, is like put people on a wait list, right? And activate them through, sequence. But you definitely don't want them sitting there too long because then it's like, oh, well, let me move on to the next thing or find a replacement, right? Replacement product. Okay, so for those founders who have a dream of getting into Target, Ulta, Sephora's of the world, what are those margin requirements? What do you need to know before pitching retailers like this? What are sort of like the things that people may not be thinking about?
You need to understand their terms. And like, so a lot of big retailers have a 2% cash discount if they pay in 10 days. So when you price your goods, you should account for that 2% price discount. And then part two, like this shipping stuff. So a lot of retailers send out fines for if you don't follow their logistics information. And that I've seen really burn small brands when you don't know. And these shipping rules are like a lot of pages. They're not
I read
one
them.
page.
Every page, every line. Actually, I think like my husband might have read. I know I read it too, but I think he was the one who's going line item by line and being like, I was like, this is too much for me to take in, like too many directions. Like I'm an entrepreneur.
Right. Like if you don't put the label in the right spot if you don't put the label in the right part on the box, you get like $100 fine every single time.
Correct.
If your order is only a few $100s, you've already taken that off. Plus then you have like the 2% discount plus then they're net 60. So you're not getting paid for 2 months on whatever that is. So I would say fully understand the terms and their shipping requirements. I mean, most retailers have a supplier portal, the bigger ones, not a lot of small retailers, but the bigger retailers have a supplier portal where you can like pull down their shipping requirements usually before you even start shipping there. To kind of like read through that. But then I think on your end, you need to really understand the cost of goods and what you need to make to do your whole operation, not just the cost of the actual item and what you're making on that specific item, but to the point, like how much you need for gratis, how much you need for marketing, how much you need to pay yourself and pay any support team that you have, warehousing.
Absolutely.
So I think understanding all of your expenses is really important before you really go pitch to them. Pay yourself 100%.
I think that's where, it's interesting because I always tell our founders, like, price your product as if you were going into a big box retailer or just any retailer. Or, even if you're if you're just doing DTC and you're running ads, like, price it so that there's room for the cost of ads, right? Especially with the cost of ads that has gone up significantly recently. It's like, price it with like you said, a lot of buffer, but also like, how much do you charge hourly for yourself, for your own time? Team. Maybe you'll want to hire a team down the road, right? So there's so many factors. Do you feel like, would you agree that it's better to price it with that buffer in mind from the get-go? Or would you say, like, put it on the market, at X price and then increase it down the road?
I think, fundamentally, I think you should price it at where you have a buffer. Like, your expenses are going to be double what you think they are. Include that in there. Yeah. And if you're going to retail, I would price it that way. You can always promote down. It is harder to gradually raise. Yeah. Especially like if you're going from, there are natural thresholds that it's a little bit easier to, like, if you're at like $12.99 and you go to $14.99, like, that's not going to be super noticeable. If you go $12.99 to $24.99, that is going to cause an issue. So I would price it where you think it should be with the buffers and everything. And then if you need to move some inventory, you can promote it down for a flash sale or do some stuff like that to kind of generate some movement. But I'm always pro pricing it a little bit higher.
Same. Same. Just there's so many hidden costs. Even if you're like, I have accounted for everything. You haven't. You have not.
100% you have not accounted for it. Yeah. I mean, you could even think about, like, maybe you're not accounting for the fact that you have a Gmail account that you're paying whatever $100 a year for Google Workspace. Like, there are all these other little things that just, like, add up. And honestly, with AI now, I feel like I've seen founders, they're adding all these AI tools. I mean, I've done this myself, so I'm not going to shame anybody else. Like, I'm like testing all these different AI tools. And then I'm like, how did I get to like $300 a month in like random AI tools? And then I had to cancel a bunch. But I mean, like, things like that will happen. So, like, always err on the side of caution is my advice.
Yes, agreed. When's the right time to invest in like a 3PL or inventory management system? Like, how do you know when you're ready?
When you're ready, I think depending on the tool you're using for PO, like to run your business, like if you're in Shopify or WooCommerce or whatever those, there usually is like an inventory add-on that is pretty inexpensive. And once you get, like the Shopify one is, I think, Stocky, you can add those on to start, not when you, at the very beginning, but like once you get to a point where you have a couple different items and you're running them through different channels to sell and stuff like that, I wouldn't be opposed to that. And you can track all your purchase orders in there. I think a 3PL is a much bigger investment. So I would make sure that you are comfortable with like your monthly baseline cash flow and that you have enough surplus to afford it for at least 6 months, because you're also probably going to have to get into like longer than that contract. But in order to do that, like I would just make sure that you have a cushion, because to your point, like the beauty industry is very seasonal. So like you need to be able to navigate the highs and the lows.
Yes.
And having that buffer so you don't end up in a situation that you don't want to be in. That would be my suggestion.
Yes, absolutely. So wait until you know what your consistent baseline is, and you've gone through a full year cycle, knowing what the cycles of your business are. Okay, so are there any other? I know you mentioned Stocky. Are there any other tools?
There are other tools. I just cannot think of the name of them right now. Like when you're going to a full, when you're going to get a 3PL and stuff like that, I would actually probably get like NetSuite, which that is very pricey too.
Yeah.
because a lot of 3PLs integrate with that a little bit easier. So I would budget that in there as well. I cannot think of what the WooCommerce plugin is, but I'll look it up. I'll send it to you. But Stocky is the one for Shopify. Gosh, I'm totally drawing a blank. I'll send you some other options of tools for that.
What else? So what's like one number that every founder should check weekly?
Their inventory on hand and their inventory on order. And if they have too much on order, is there anything to do to push it? They can push it out.
What's that? Okay. One red flag metric that tells you your inventory is dragging down your business.
Your inventory turn or even your profitability. If you're spending so much in warehousing and holding costs, even holding costs of just holding bottles, both of those things are pretty big red flags.
Okay. And what's maybe one myth about selling out that needs to die?
Sometimes you want to sell out and celebrate. What's the role of the item? Like a holiday item, you want to sell through that bad boy before Christmas and be so excited that you didn't have to mark any of it down. I think sell through is totally based on the role of the item. What is its purpose?
Oh, I love that. Okay, great. And then tell me what your favorite beauty product and why.
My favorite beauty product is vitamin C serum. I think it's had the biggest change of my skin tone, like my skin texture.
No way. Which one do you like?
So I like the Obagi one. Okay. I like the Dr. Dennis Gross one. You know what my other favorite item is those peel pads. Those exfoliating peel pads.
They're very good. Yes.
Love those. But I'm always trying new vitamin C's, but I'm religious on the vitamin C.
There's one vitamin C that I'm using right now from one of my brands in C2C. It's called Rethinking Botanics. And I become obsessed. Well, they're Australian based, so we wouldn't be able to buy it in the US. They ship me like a whole, set of samples to try out. I'm obsessed with their vitamin C serum. It is so hydrating, because a lot of times I find vitamin C serum to be a little bit drying sometimes, but this one is just great. Just great.
Interesting. Well, when they come to the US, I'll be ready to
exactly.
test it out.
I actually emailed them the other day. I was like, is there any way I could get, because there's other products that I was trying that I'm already out of from their brand, and I'm like, is there anywhere I could buy this in the US? So I don't think that it is, but TBD.
Okay,
So
we'll keep you
Danielle,
posted.
how can people find you? What's coming up for you?
Well, I'm on Instagram under the RetailOI, like ROI, but RetailOI.
Nice. Like that name.
I actually just deleted all my Instagram posts, so I'm starting over. So you can find me there. And I'm launching some courses in the next couple of weeks, and then part 2, I'm doing intensive. So that is how you can find me.
Amazing. And what's the future? Any trends we should be keeping an eye out in the next, 6 months regarding supply chain management, inventory, etc.?
Well, I'd say the tariffs are a big one. And also the ports go on strike every year. So I know every year we're surprised by that pretty much, I feel like.
Okay.
But it happens every year around the holidays. So
okay, good to know.
Usually in October. This year got kind of pushed to January and then it didn't actually happen. But I would say in October every year, there's always a threat of a strike, because that's obviously when the port workers have the most leverage. So just keep that in mind as you're building for holiday. Like I would buffer in an extra week or 2 because it slows down always at that time. And then also there's like more shipments coming in.
That is brilliant. Who knew? I mean, obviously you knew. But
well, because I've been doing it for so long, and every year it happens, and then we never factor it in, or I factor it into my plans, but a lot of people don't factor it in because and then it's on the news like, oh, there's suddenly a port strike. It literally happens every year.
That is fascinating. Okay, good to know. So buffer in time, especially for any shipments coming in specifically for the holidays.
Yep.
And this has been so interesting, so amazing. Thank you, Danielle, for sharing everything that you know about this like very niche, but like critical piece of any beauty, health, and wellness brand out there.
I'm so happy to share it. I want everybody to build their brands profitably.
That's the big thing. It's like the inventory management is what allows for ultimately for profitability.
Totally agree.
Beautiful. Well, thank you, Danielle. And for all of you who are listening, if you love this episode, please give us a review. We appreciate every single one of them. And we'll see you all on the next episode of the Beauty and the Brand podcast. Bye, everyone.